Hi guys, welcome back. So I haven't done a market update for a few days, so I'm gonna do it now. And I'm gonna update with you our stocks to inform some buying prices. And then I'm gonna tell you what stocks to buy next week or the stocks to watch out for. Okay? So Nasdaq is still up and running, even though it hasn't broken the all-time high yet. But I think it's just a matter of time. I said on this day that I think Nasdaq is heading to all-time high. At most, we will have a pullback in between, back testing the support. And we saw we had a very nice back test, making it more healthy run up. S&P 500 had already made the all-time high on Thursday, even though with a very terrible CPI number. It just shows you that the market had already digested the news and expected the number to be bad anyways. And as I said on this day, there was the big sell-off at the end of the market, and I thought that was digesting the bad news of the next morning already. So that's why the next day we saw a really strong run up and making all-time high. So S&P 500 already made all-time high. I think next one would be the Nasdaq. To predict what's gonna happen next, we can summarize the whole correction, the whole journey. On March 5th, this day, when Nasdaq hit the lowest point of 12,397, I called out the bottom of the market because I think the panic sell had happened already. And the video I made was this one. It says, smell the blood, fear sold. I said a lot of people panic sell in fear, and that is a good sign of bottom. So turned out it was the bottom of the market for Nasdaq, S&P 500, everything. But what I didn't see coming was the extreme diversion between the FANG stocks, the index stocks, and the growth stocks. We knew it was a destroy for tech stock, but I had no idea. I didn't see it coming of such extreme diversion between the FANG and the rest of the growth stock. So the market bottom on March 5th, we all had a nice bounce back. A lot of our growth stocks also grew very well with the market. And I said that the panic sell had happened already. So if you had the chance to grab the shares at the same price that people panic sold, chances are there might be lower lows. So I wouldn't take it. And it just happened that really most of the growth stocks who went back to the lowest point of March 5th would just keep dipping to lower low, because if they give you a second chance, chances are there might be lower lows, because it was panic sell, and panic selling is done when the people were making decisions out of rationale, so the institutions could pick it up at the bargain. So if they give up the shares they picked up at the bargain, it's usually because they think there's chance they can buy it cheaper. Market continued dipping, and on this day, March 24th, that I called out a bottom again. It was the lowest in closing price for that dip. The video I made was this one. I said, I see good news because the fear level, it's finally back to fear. At that time, it was closer to fear because the 1 year bull market we had last year really made everybody too greedy. So at that time, even after such a correction for more than a month, the fear and greed index were still in greed for most of the time. So that's why on this day I called out the bottom again because of that. But I also did not expect such a huge divergence between the index and the growth stocks, especially Chinese stocks, because it was the SEC law passing through and also the Bill Huang's margin call accident that drove a lot of the small caps growth stocks, especially actually mostly Chinese stocks, to dip down even further. But on this day, it was the second lowest point of the market in the end of March, then the lowest point on March 5th. And then on this day, May 11, I said tech stocks had bottom, reversal coming. I said March 5th was a panic sell, and this was definitely frustration sell. It is when people finally sold out of frustration, versus on March 5th, people were panicking because they saw their stocks dipping so fast they had no time to respond, because they feel like if they don't sell now, they would lose more. So it would turn out usually to sell at the bottom before it quickly bounced back up, and then they would start to regret. But on May 11, I thought it was frustrated sell because it was after a long time you saw your stocks decreasing every day, slowly a little bit, while you would just think, okay, I don't look at it, I can take it, I'll just not look at my account. After so many days of small dipping and finally one day of dropping big, that is usually a last shake, when people would finally lose it and cannot take it anymore after such a long time of dropping. Every day you see it, you check your account, you tell yourself, I should have sold yesterday, I should have sold last week. If I sold yesterday or 2 days ago, I would have saved how much money. So during the whole time of dipping a little bit every day, that's how you would feel, right? And then one day there's suddenly a big shake of dropping even much more, and then you will feel, okay, that's it, I'm out. So that is frustrated sell, and that is what I believe had happened on this day. And because Nasdaq had another day of dropping after, so there are comments like, this is too funny, if I weren't losing insane amount of money, I'll be laughing. And there are some other comments like, just do exactly the opposite of what she said and you'll make money. And I got really frustrated. And also that day I happened to watch other YouTubers video, and I follow him because he's pretty good at technical analysis. And he said, there is no way that the market has bottomed yet. It's gonna keep dropping. I've watched other YouTubers saying the market had bottomed already, and I really don't know how they read the chart. So I went into really doubting myself. But if you check, a lot of the growth stocks had really bottomed on this day, May 11, and others had bottomed the next 1 or 2. So it was really the best chance to buy in for a lot of the growth stocks, because it was a lot of people selling out of frustration. Not panic, but frustrated. Remember on this day I gave out the fireman story. I said everyone is running together at the same time, jamming the exit. So do you want to run with them, squeeze the exit, jump off the building, or wait for the fireman to come? So it turned out the fireman had really come in the end. So on this day, the Friday where it had a nice rebound, I said that I saw a short position opening, and I gave example of the divergence between Nasdaq's movement and ARK-K ETF. I thought a lot of short positions were opening throughout the whole day, and if ARK ETF is being shorted, that means a lot of growth stocks were being shorted as well. So that's why I said if those positions were opened by retail investors or smaller institutions, that means we're gonna have a nice short squeeze after. And that was what we have. A lot of short positions being opened this whole time, and a lot of shorts are being squeezed. The index kept running up without much volume. There were a lot of people who FOMO in to open short positions and lost money, driving the growth stock rebound fast. During these days, the fear and greed index were in extreme fear level, and I said we've waited for so long to have the extreme fear, and we should enjoy it while it lasts. So we had opened a lot of trading position and caught a lot of nice profit at the rebound, like Palantir at 18, Jamir at 23, Open at 13, Butterfly at 9, QS at 24, all of them at the lowest price, and CAN at 7, SOS at 3. A lot of frequent buy and sell for the short term, because I thought within this rebound trend, the money would be really moving very fast, and usually the bottom rebound is the strongest and fastest with the most profit to take. Because at this point, I said it really reminded me of last year in March, during the crash of especially the recovery stocks. It was the best time to do trading during this rebound with so much volatility. And for me, it's not the time for buy and hold, but catching a lot of nice rebound here and there to maximize or take full advantage of the rebound. So that's why during the whole run up, I said we need to enjoy it and dance as long as the music is still on. Even on this day, a lot of people freaked out and thought it's gonna keep going down. I said it's just a pullback, we're still uptrend. Music is still on, and I see it making all-time high, because I think a lot of people had sold out of frustration, and there were still a lot of bad news in the market. That's why the fear level was so high, and the stock just kept running up, and they think it's a dead cat bounce, and they wait on the side. A lot of money is still on the sideline, and they're not going to enter here because they're waiting for the CPI number to be released, because everyone was very afraid of that, afraid of inflation, afraid of the Fed increasing interest rate, so they didn't enter even with the dip, they wouldn't, because they thought it's going to keep going down, right? And now the market didn't go down more and it just keep running up, right? And they're still waiting on the sideline. The other day I saw people asking questions like, so that's it? The CPI number is so bad and the market is still up and S&P 500 making all-time high. So what do I do with all my cash now? So I think people were still having money on the side, like with mostly cash, because they had exit here. During this time, I saw many people had decided to give up on growth stocks or give up on stock market or move their growth stocks to the S&P 500 index fund, the SPY. So imagine you cut loss at the lowest point and change it to SPY that grew 1% in the last month. So that's why I think the party is not over yet until the people who sold before FOMO back in and drive things further up. This is when we would have another pullback or correction. Could be a quick dip. So I think the music is still on, but we need to be a bit more careful than before when everything was super low and had to rebound. Now we can still enjoy the music, but we need to be more careful than before. I'll keep monitoring the index and the fear and greed index as well. But as of right now, I think I would gradually move my money that I trim from my long position before to get into more short trading back to my long position. It's like I borrow money from my longer term stocks to enjoy my short term trades to catch the rebound, and now I need to slowly park it back to my long position. As I think right now, the market is getting more normality, unlike this whole time when everything is driven by the market altogether, all sectors. Right now, we are starting to see more divergence between sectors. Like the last 2 weeks, the EV sector and the solar sector grew very well, more than the other sectors. So I think this is looking more normal, better than before. What we just had, this correction, was not normal at all when the market had been only mostly going sideways, while a lot of the growth stocks were crashing like this. To have such a big divergence, this is absolutely not normal. The last time this happened was during the dot-com bubble, when the S&P 500 were just staying flat and all the tech stock went crashing, wiping off 50 to 80% of value from all-time high. So we have experienced something that happened once every 20 years. How lucky! Yay! And I believe back then during the dot-com bubble, at the bottom of the tech stocks, there must be a lot of people that cut loss out of frustration and decided to stop investing in tech stocks because it's too risky and move on to the S&P 500 or the index fund only. So that is why a lot of money is still on the sideline or moved to value stocks and wait until the money on the side FOMO back in. Then we are gonna have a sudden dip. So I think we might still have a few days of happiness and then follow with a quick dip, maybe. It's impossible to time the market. I'm just giving my thoughts at this moment. But even if it suddenly dips, there are a lot of supports below it, as I indicated here. 1, 2, 3. So here it is. I share with you my whole thinking process during this correction and my reason for the prediction for next week or the near future. Now, on the Chinese side, I said we are gonna have a consolidation or pullback. So far, it had been going sideways for almost 2 weeks already. Actually, more than 2 weeks. After the breakout, it was going on the sideways for 13 days. My prediction is it might have a breakout and then suddenly dip to the previous support. But I don't know how long it would take. That's my prediction right now. We'll see later. But on the other hand, for the Hang Seng Index, it was not going on the side. It was having a dip during this time. So it might be a possibility that the pullback is near the end. Maybe it would take a little bit longer, or maybe it has ended just now. But it could also be a last shake and then finish the pullback and keep running. So that would be my prediction for the Hang Seng Index. So now let's move on to our stocks. First of all, let's talk about our baby NIO. It had a very nice run up from the bottom of 30 to the highest of 46. It's because after this correction, the EV was really the first sector to run up first. The EV sector and the solar sector had a very strong rebound. Look at Xiaopeng. This is indeed one of the strongest rebound from the bottom. A run up of 84%. BYD 57%. So that's why right now a lot of people ask, is it a good time to buy NIO now? If I don't buy in, would it keep taking off? And I would say in the long term, sure, you can buy in anytime you want. As I kept saying for NIO, whatever price you buy in right now is still considered cheap in a few years. But for short term, I wouldn't think NIO is the best target for the short term right now, because we are gonna have a resistance at 47 pretty soon. So if you get in at 45.6 and have resistance at 47, then you're buying in for 3 or 4% of profit in the short term, and it might come down to a back test later. How far depends on the market at that time. So that's why. And also for the short term, you need to watch out for the institutions to take profit. So many institutions bought the dip and they already had nice profits so far. And when more and more people FOMO back in after they sold, this is when it's easiest for institutions to start to take profit. And with the profit, they can move on to other sectors that have not gone up yet. As I said, EV was really the first sector to get up. So for the short term, the best buying opportunity would be either if it backtests the supports. There's one at 43 and there's one at 42, another one at 40, so a lot of support. So backtesting support would be okay to buy the dip. Another opportunity to buy would be when it really breaks the resistance of 47, backtested, confirm the support can hold, then it might be the best time to buy for short term. But if you are long-term investor for NIO, then like I said, anytime you buy, it's okay. We are still far away from the peak in the future, years later. So if you're feeling anxious and don't want to miss out, and you believe in the long term of this company, and don't mind if it dips after you buy, then anytime is okay. It is very clear that the institutions are buying in the EV sectors recently. Next is EH. I said it would grow to 43 and then come back down to 35 to 36. So when it was backtesting 35 to 36, I gave out the notice on Discord. You can buy the dip, at least to start buying the dip and have cash in case it dips lower. And the support is the same as I gave before. Now, after the great news for LKCO, a lot of people ask me whether if it's good to buy in. Now, I said that I have learned my lesson to not recommend anyone to buy in after the run up, because I got blamed a lot last time it happened and I felt bad. So this time after the run up, I would definitely be more careful. But with that said, I do think right now, I still think after such run up recently, it's still running, still has room to grow. As I explained in my video yesterday, I thought this day was a run up first to give you an opportunity to sell. And then it was some shaking here on the next day on Friday. Go up and down, but in the end remain at the relatively high position for a while, giving you all the time in the world to sell. Not many people would buy in on Friday, because at that time everybody would think that 1.7 is high. So the fact that they remain 1.77 most of the time around that range makes me feel that this is the chance for people to sell. And if my thesis of this psychology is true, then I think on Monday it would just go up, continue to go up. So if you believe in this company in the long term and you really want to buy in, I guess you can start your position. It's okay to buy in at open, or if after it opened it had a quick dip, it's okay to start your position there and have cash in case it dropped lower, and you can continue to dollar cost average if it gives you the dip. But my prediction is for it to go up on Monday. I really hope so anyways. With such a great news that everyone who were afraid to buy in before can now buy in finally. More brokers would let retail investors to buy in, institutions can feel free to buy in now, then chances are institutions would want to buy in before more retail investors are allowed to buy in, right? So that is my prediction. Don't blame me for hyping up the stock later if it dips, okay? Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.